Hello and welcome to myfinanceteacher.org. In this video we're going to look at gold, silver, as well as S&P 500 and an interesting indicator there, 25-week return. I think that indicator can be useful in trying to catch some of the intermediate cycle lows that generally happen only a couple of times per year. But first let's start with a short-term view of gold. As I've already mentioned a few times in my previous videos, there is a good chance that this 12th of April was the end for that previous short-term daily cycle low. The reason for that is that it would give us a cycle which would be 68 days old. That's pretty normal for duration of a cycle, so that's why there is a good chance that we have already finished with the cycle. If that is the case, then I would expect another short-term daily cycle within the ongoing intermediate cycle to push the gold price a little bit higher over the next 1 to 2 weeks, and later on into maybe the end of September bring us substantially lower prices. Not as low as I actually drew it, maybe somewhere below the 50-day moving average, somewhere closer to the 200-day moving average. That intermediate cycle low is what I'm actually looking for in terms of a larger investment. The intermediate cycle is now on day 150. Usually these cycles last for about half a year, so we probably have another 1 or 2 months in front of us. And on the other hand, there's also a good chance that the ongoing short-term daily cycle in gold is still continuing, in which case we'll see gold make another trip down close to 50-day moving average before that bounce into the new cycle and a drop into the intermediate cycle low. To be honest, at the moment I'm not really sure which of the scenarios is going to play out in the very short term over the next 1 to 2 weeks. But in about 1 or 2 months, I still do expect noticeably lower gold prices. For that reason, I'm in cash at the moment with my precious metals related part of the portfolio. So generally, I think it's wise to wait and see what happens. Let's zoom into the 4-hour chart. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. The reason that I'm not jumping into precious metals at the moment, even after this noticeable over $100 drop, is a couple of reasons. Firstly, it looks like a bearish flag over here, and if the bearish flag is to play out, then one would see a measured move down based on the height of this pole, which is, let's say, around $100 or so. So $100 down from somewhere here at around 1950 is the price of about 1850. That would actually bring gold much closer to the 50-day moving average, and that would be a nice finish to the ongoing short-term daily cycle, giving us another short-term bounce into the next cycle. And the second reason is this flag actually also looks like a rising wedge, and a rising wedge is also usually a bearish sign. Over the last couple of days we see gold dropping out of this bearish wedge, although today gold is relatively strong. So at the moment I'm not really certain which way gold is going to go over the next 1 to 2 weeks. If gold breaks the recent high, that's at about 1967, then there is a good chance that we are in a new daily cycle and we'll see relatively stronger gold price over the next 1 to 2 weeks. If we break the recent low, that's, let's say, somewhere at about 1928, then I'd be inclined to say that we're still in an ongoing daily cycle lasting for 73 days already, and we would probably see the end of the cycle in another few days. In either case, the short term is a little uncertain at the moment. Let's look at the intermediate term. The 25-week moving average can help with that. So the red line over here is the returns in percentages that's on the left-hand side over the last 25 weeks of holding gold, and the blue line is gold price itself. As you see, intermediate cycles in gold often finish or give us a nice buying opportunity when this 25-week return reaches close enough to negative 10%. That happened over here in the second part of 2014, in the middle of 2015, at the end of 2015, a slightly lower low for this 25-week moving average at the end of 2016, and again another similar signal over here in the second half of 2018. On the other hand, sometimes a buying opportunity presents itself when this 25-week moving average comes down to 0 to a positive 5%. as it happened, let's say, in the end of 2017, for example, or more recently in the middle of 2019, as well as in March this year. Of course, this 25-week return sometimes dips much lower before the intermediate cycle comes to its end, as over here, for example, in the middle of 2013, this indicator reached down to negative 26-27%. But that, of course, was in the midst of the bear market in gold. In either case, over the last 15 years or so, it's generally been nice to buy gold when this 25-week return is anywhere between negative 10% and positive 5%. And where is it at the moment? Well, this is a weekly indicator, so we're looking at this indicator based on the closing price on Friday, and that would give us about 18%. Which is a little bit high compared to that nice range between negative 10 and positive 5. So that's another reason why I'm still waiting for a nicer buying opportunity in the end of the intermediate cycle, sometime over the next 1 to 2 months. After all, gold is still relatively stretched above its 200-day moving average. Right now, it's nearly 18% above 200-day moving average. And at the recent low a few days ago, it still was over 12% above its 200-day moving average. A similar situation is with silver. Silver usually follows gold, so I still expect noticeably lower silver prices over the next 1 to 2 months, and silver is a little bit more stretched to the upside compared to gold at the moment. Looking at RSI, for example, gold's 14-day RSI is at 55.7, whereas silver's 14-day RSI is at 60.1, and at the moment it's nearly 51% above its 200-day moving average. And even at recent lows a few days ago, it was still around 32% above its 200-day moving average. So I still expect some mean reversion, some correction, some cool down in silver price as well. Now looking at the 25-week return for silver, again over the last 15 years or so, it's generally been nice to buy silver when this 25-week return was anywhere between negative 20% and negative 5%. As in here, for example, near the second half of 2014, in the middle of 2015, of course at the end of 2015, before that bull market in precious metals began, then again at the end of 2016, a few buying opportunities near the negative 5% zone in 2017, and just somewhere around negative 10% in the second half of 2018. And sometimes this indicator also bottoms just slightly above that negative 5%, as in the middle of 2019. So the sweet spot is anywhere between minus 20% to close to 0%. And at the moment, this indicator, 25-week return, is at over 40%. So in the intermediate term, over the next couple of months, I think silver is still a little bit too hot for me to jump in with too much capital, and I'm still waiting. Next, let's have a look at S&P 500. Similar situation in S&P 500 in terms of the intermediate cycle. It's 144 days old. Usually these also last for half a year or slightly longer. So I would expect noticeably lower S&P 500 sometime over the next 2 to 3 months, possibly as this uncertainty with elections escalates. And in terms of the short-term daily cycle, it's now 46 days old. These usually last for about 1.5 to 2 months. So I would expect some correction over the next several weeks, especially as RSI is inching closer to that oversold area, and S&P is giving us several pokes through the upper range of the Bollinger Bands. So on S&P 500, I'm also waiting at the moment. Let's have a look at the 25-week return for S&P 500. It's actually quite volatile, but over the last 15 years, really nice buying opportunities come when the 25-week return drops below 10%, as in the middle of 2011, for example, over here in the end of 2015 to early 2016, at the end of 2018, and of course more recently in March this year. But these opportunities only come once in several years, with the so-called 4-year cycle in the stock market. More frequent opportunities with the intermediate cycles lasting for about half a year or so, opportunities can come as this 25-week return drops below 5%. As you see over here, the second half of 2012, in the second half of 2014, end of 2016, second half of 2017, and so on. And at the moment, this 25-week return for S&P 500 is just above 0%, just above 0%. And as you've seen, a sweet buying opportunity can come when this indicator drops down to below 5%. We're just above zero, but we're actually coming up from negative 28%. S&P has already done a fantastic performance, bringing the 25-week return from negative 28% to above zero. So I think some cool down over the next couple of months is actually possible. And what I'm doing at the moment is still waiting for that cool down. So in summary, I'm in waiting mode both in the general stock markets as well as precious metals. But I think an amazing buying opportunity is going to come up over the next several weeks. So if you are watching this video as a member at myfinancesteacher.org, stay tuned for my regular updates. I think we're going to do pretty nicely over the next few months. And if you are watching this on YouTube, consider joining us at myfinancesteacher.org, where I provide regular updates on a range of assets, mostly in terms of technical analysis, and my colleague writes weekly newsletters where he shares his general investment experience that he's accumulated over multiple decades. For now, I wish you a wonderful day. Let me know if you think precious metals are going to correct over the next couple of months. Before you share your opinion in the comments, hit that like button and good luck in your trades.